there's kind of an inconsistency between generational ability to understand it, where that baby boomer generation, in some ways, they get it sooner and earlier. Whereas a lot of like millennial, for example, investors, their conceptual framework of Bitcoin has been a lot more polluted by the crypto blockchain marketing machine. It's actually harder to get them to understand the significance of Bitcoin. Advisors who are still trapped at traditional financial firms and frustrated by the inability to embrace Bitcoin the way that they want to, I would expect they will continue feeling that way for at least the next 5 years. The first question that I ask is, if something were to happen to you, if you were to pass away unexpectedly, would your heirs know what to do, or would you make an unintentional donation to the rest of the Bitcoin network? If they don't have at least somewhat of an answer to that, then that's a pretty good indication that they need to do some planning.
Hey, everybody. Tyler here with the Bitcoin Treasuries podcast for BitcoinTreasuries.net. Today, I'm talking with Matt Golliher, a partner at Orange Horizon Wealth. Matt and his team are helping Bitcoiners who have traditional assets to manage alongside Bitcoin products and services. Matt has also been a key voice speaking to investors who are curious about Bitcoin and to financial advisors who have yet to understand Bitcoin. Matt, welcome to the show.
Thank you for having me. It's great to be here.
Awesome. So, Matt, you wrote an open letter to financial advisors about a year and a half ago called "It's Time to Study Bitcoin." In that letter, you kind of started things off with calling Bitcoin digital Beanie Babies in 2017 was your reaction. And now you've co-founded the Orange Horizon Wealth division of your wealth management services. What was your moment or your realization that, kind of turned the light bulb on for you in Bitcoin?
I think for a lot of Bitcoiners, unfortunately, it was the point where I actually put some significant time and energy into researching it. Yeah, in 2016, to give myself a little bit of credit, that was the year when clients first started asking me about it. So I did spend some time trying to figure out what this thing was. But at the time, with everything happening in the crypto industry, with the ICO craze and blockchain this, blockchain that, I just really couldn't see through what I call the crypto haze to see the bright orange signal shining through, which was Bitcoin. So conceptually, I just lumped Bitcoin in with the rest of crypto and dismissed it all, for the reason that we continued to dismiss non-Bitcoin crypto. But 2020 was the year where, number one, I joined Vista Investment Partners. We're an RIA in Richmond, Indiana. And my first day at Vista was March 23rd of 2020, which is the day that Indiana's governor announced the shutdown for the pandemic. So I found myself in a new job, new company. The world was shut down. I had some time on my hands. We were getting ready to print trillions of dollars, and something made me notice that this Bitcoin thing wasn't dead yet. It was still around. And I just got the thought in my head that if I'm going to keep dismissing this thing, I need to know what it is. I thought it was stupid, but I wanted to know it was stupid. So that's what triggered me to order the first book about Bitcoin I ever read, which was The Bitcoin Standard by Saifedean Ammous. And before I was even done with that book, I realized I had overlooked something. I had done a fair amount of learning about Austrian economics and the underlying theories that make Bitcoin work well before Bitcoin. So I didn't need sold on any of that or what the problem was that Bitcoin solved. I just didn't realize prior to that someone had actually figured out a solution, and that someone was Satoshi Nakamoto. So from there, fell down the proverbial Bitcoin rabbit hole, obsessively read every book I could get my hands on, listened to every podcast I could find, and luckily, it was pure luck that I happened to leave the bank channel where I was an advisor previously to join Vista, because if I'd gotten orange pilled there, I'm not quite sure what would have happened. I don't think I would have made as much progress, but here at Vista, the managing partner, Brett Guiley, he went down the Bitcoin rabbit hole with me. And after about a year, we had concluded that this Bitcoin thing is probably the most important financial innovation we're going to see in our careers. And as financial advisors, we couldn't not do anything about that. So we set off on what ended up being about a 3-year journey, disrupting every aspect of our traditional wealth management business to fully embrace Bitcoin. And that all really came together in May of 2024, when we launched Orange Horizon Wealth, which is the Bitcoin focused division of Vista Investment Partners. So for our traditional Vista clients, we're still Vista. We focus with them on educating them about Bitcoin and helping introduce it to their portfolios as appropriate when they're ready. But for Orange Horizon Wealth, the client that we're best able to help is people who are already Bitcoiners. Typically, people who already own a significant amount of Bitcoin or Bitcoin investments, and usually people who also own non Bitcoin traditional financial assets and investments, and want help from a team of orange pilled financial advisors that understand both worlds and can help them try to strike the smartest balance between the two. So that's our main focus at Orange Horizon.
Really cool. Man, your story hits home, almost beat for beat, the same as mine.
Yeah,
My only departure was I actually bought and sold Bitcoin in 2017 because I thought it was a meme. And yeah, I wish I had all that Bitcoin that I had in 2017.
I bet.
So, like you said, a lot of your clients are Bitcoiners or own a significant amount of Bitcoin. How do you think about portfolio construction with someone who already is deep into the Bitcoin ecosystem? And then secondarily, how do you talk to someone about portfolio construction who might be curious or bring up Bitcoin or know that you guys kind of provide some of those services?
I think of Bitcoin really in two categories as far as the ways that it can benefit an investor. The first way is as a savings vehicle. And under that approach, we try to do a very good job educating clients the difference between owning actual Bitcoin and Bitcoin related investments, the benefits of self custody, and the trade-offs and responsibility that go hand in hand with that. And one of the pieces of the puzzle we had to solve was figuring out a way for us to offer actual Bitcoin to our clients, which we are now able to do through Swan Advisor Services, the RIA platform from Swan Bitcoin. And so as a savings vehicle, that's the first way where the goal is essentially to buy and hold Bitcoin and to keep it safe and secure. And of course, there's planning around that will typically need done besides, custody planning. You have estate planning and things that go into that. But the investment piece of that is quite simple because at the end of the day, Bitcoin is not an investment. It's money. It's a monetary good. And so in order to save in it, all you have to do is hold it and keep it safe. The second way that Bitcoin can benefit investors is as a portfolio enhancer, where Bitcoin exposure sits side by side with traditional assets like stocks and bonds and is managed along with them and rebalanced. And we have a series of portfolios now that include a wide range of Bitcoin exposure. And for that, it's typically more efficient and cost effective to get that exposure through the spot Bitcoin ETFs. Price exposure to Bitcoin is the one thing that they do really well, even if they do lose all the other benefits of actual Bitcoin. So those are the two categories that we look at is as a savings vehicle and as a portfolio enhancer in a broad diversified portfolio.
Yeah, that's interesting. How has it been, providing those financial services and investment advice to people who come from like different generations? Millennials and younger are more crypto native or more Bitcoin native, whereas it may be a bit of a harder sell or education piece for your older clients. Is that the same trend that you see?
It varies along a few different dimensions. Counterintuitively, most of our clients are baby boomers or Gen X, older individuals. And in my experience, just working with Bitcoiners and, we've done a ton of Bitcoin seminars, Bitcoin education events, Bitcoin advocacy in our community. I've actually found there's kind of an inconsistency between generational ability to understand it, where that baby boomer generation, in some ways, they get it sooner and earlier. Whereas a lot of like millennial, for example, investors, their conceptual framework of Bitcoin has been a lot more polluted by the crypto blockchain marketing machine. So sometimes even if they are crypto native or crypto friendly, it's actually harder to get them to understand the significance of Bitcoin. Sometimes I'll have an easier time doing that with an older investor. But beyond some just general trends like that, it covers the range of responses that you get regardless of how old someone is. Some people hate Bitcoin. They think it's a Ponzi scheme, scam, whatever. Some people love Bitcoin and they're 100% Bitcoin, and their mindset is, why would I want to store my wealth in anything else? And they're 100% not your keys, not your coins, self-custody Bitcoin. That investor typically doesn't need us. Unlike a lot of financial advisors, we don't think that that's some insane, super speculative thing to do necessarily if it makes sense for their situation. One of the benefits of Bitcoin is you don't need a financial advisor to hold Bitcoin. So that's why I say usually the client that we're best able to help owns other assets besides just Bitcoin.
Yeah, that's really interesting. Obviously, I'm doing a podcast for Bitcoin Treasuries.net. The last year has been, I think just wild on the Bitcoin Treasury front, of course, spearheaded by Saylor in 2020. We saw Tesla add Bitcoin to their balance sheet. We saw Figma IPO last year with some Bitcoin on their balance sheet too. So there's a lot of strategies being employed around the globe. How do you think about the Bitcoin Treasury landscape for your clients who may be interested in Bitcoin Treasury equities, and just personally yourself, how are you thinking about investing in these companies?
In some of our model portfolios with Bitcoin exposure, that does include equities of companies like that. However, we have been very, very cautious to add additional companies. We've, not to name any individual securities, but most of that exposure sticks with the first mover, I guess I'll say that. And we are very cautiously wading out into alternative treasury companies. So that's still something that we're actively exploring. In general, we think that if the investment objective is to outperform Bitcoin, then by definition, a company that stated strategy is to increase Bitcoin per share is a potentially appropriate investment. The key variables just have to do with competitive advantage. What can they do that other companies trying to do the same thing can't or won't do? And jurisdictional differences. A company that is in one jurisdiction and has to abide by certain securities regulations that others don't, that can give certain advantages and disadvantages. So we look at all of that. We think conceptually it's a valid concept, but at the end of the day, I think where this probably ends up is most of them will likely fail to get much traction, will probably get acquired by other treasury companies. But I do think there's room for potentially a handful of long-term winners. That's our current outlook, at least.
Yeah, I think we need to clip that and send that to every Bitcoiner who's a bear on Bitcoin Treasuries, and even the most diehard bulls in the Bitcoin Treasury space, because I think that's a really level-headed take. You've seen on Twitter, maybe that's not the best place to gauge sentiment, but sentiment's all over the place. There's lots of infighting among the Bitcoin crowd, and that's what we're doing here at Bitcoin Treasuries. We're trying to dig into the analysis, dig into the data, and educate our listeners about these companies and help these companies tell their stories. We talk to a lot of financial advisors who watch my podcast, and I still hear about career risk at some of the bigger firms. So especially advisors who are working at, some of the top brokerages in America, they may not offer even the Bitcoin equity products, or at least the digital credit products that Strategy offers, such as Stretch and Strife and those types of products. And the advisors I talk to, just casually off air, do have a sense of being singled out as maybe a crypto bro for just mentioning Bitcoin or trying to get those products added to a portfolio. Now, obviously, you're a lot more nimble with your independent firm that you have, but how real is the risk today within those firms that maybe with people you've rubbed shoulders with? And has the overall landscape gotten better in the last 5 years since you have focused on Bitcoin investing?
It has gotten better, I would say, very slowly and at a pace where advisors who are still trapped at traditional financial firms and frustrated by the inability to embrace Bitcoin the way that they want to, I would expect they will continue feeling that way for at least the next 5 years. So, having said that, though, you have seen some marginal improvements. The approval of the spot Bitcoin ETFs, I think, shifted a lot of the narrative in my industry around it by just simply legitimizing the asset class, where you would go from, the dominant information source materials that you could look at or share with colleagues being, Bitcoin books, Bitcoin podcasts, to now suddenly the largest institutional money managers in the world are putting out very professional looking research reports on it. So there have been things like that that have shifted. Other than that, though, I think by and large, there's probably fewer people in this industry that consider Bitcoin an outright, just scam. But I think for those who have a positive impression of it, there is still a lot of, blockchain, digital assets, not understanding why Bitcoin's the thing. There's still a lot of people who are just casually enthusiastic about the new technology. And even for those who have that mindset, or even those who understand the difference between Bitcoin and crypto, there are still a lot of folks whose mindset is that, it may be here to stay, but it's still a very risky speculative asset, doesn't have any cash flows. So it may be appropriate for a 1 to 5% allocation in a diversified portfolio for select clients on a contingent basis if they check these certain criteria. So I'd say that's still the dominant viewpoint of this industry as far as Bitcoin as an asset class.
Yeah, that makes a lot of sense. And again, I'm so glad we've got people like you out there orange pilling the investor base. You mentioned that you read The Bitcoin Standard by Saifedean, and you read a lot of books on Bitcoin, monetary history, Austrian economics. If there was an advisor maybe who came to you who was looking for more information, other than sending them maybe to a podcast or to read some articles, what one book or idea helped you break through other than The Bitcoin Standard, maybe, Matt?
The one that comes to mind first is The Price of Tomorrow by Jeff Booth, which I think mentions Bitcoin like once or twice. It's not stereotypically a Bitcoin book, but what it does focus on that is not paid enough attention to among, advisors is the problem that Bitcoin solves. And until you understand the problem, it's kind of hard to understand the solution. Otherwise, Bitcoin seems kind of pointless. What the problem is, and what this book focuses on, The Price of Tomorrow, is that technology is deflationary. Meaning, if we're improving technologically as a society and as various industries, then that should drive the cost of everything down. And probably one of the most dramatic examples of that over the last few decades has been microprocessing, or a lot of things related to electronics and computers, where they just get cheaper and cheaper every year. And a light bulb moment to understand about that is that that same thing is happening for every product in every industry in the United States. Maybe not to the same extent, but are we better and more efficient at building cars, for example, than we were 30 years ago? Yeah, we are. We have sophisticated computing, whereas before we didn't. Of course, that's going to have downstream deflationary effects on the production of any good or service. And so the question is not why are prices going up? It's why aren't they going down? And that offers a glimpse into, what the true problem is, which is the money, the currency. And I thought Jeff Booth did a really good idea of explaining what for many people is a foreign worldview in a way that opens up all the other doors that you can explore to understand Bitcoin, from Austrian economics to cryptography to game theory to everything else. I think The Price of Tomorrow sets the table very nicely for continued exploration.
Yeah, that's a great book, and Jeff Booth really, I think, just frames it so well. I remember Peter Thiel over the last decade and a half talking a lot about how there was so much innovation in the digital space because there just wasn't much government regulation, and more in the physical space. He thought that the solution was deregulation in the physical space, and petitioning government or just startups outside of more oppressive regulatory environments. But I think what he did miss at first was that you've got to fix the money. I think Jeff Booth kind of piggybacked on a lot of Peter Thiel's work there and did a lot of the heavy lifting for us. In reading that book and reading The Bitcoin Standard, how has it shaped how you think about government spending, how you think about the regulatory environment? Has it shifted your Overton window about how you think about what's possible and how we can change these big entrenched institutions?
It's definitely changed what I believe is possible. To give you some, I guess, ideological context for me, the first politician I was ever excited about was Ron Paul back in my college
Enough
days.
said.
I read The Creature from Jekyll Island when I was 19 years old. So, as a young college student on my own, I had already gone down the rabbit hole of the evils of fractional reserve central banking and the scourge that's been on humanity for the last century. The way I view government central banks deficit spending, that largely hasn't changed since I was a teenager. I still aligned with the libertarian oriented viewpoint of the role of government and the problem of the institutions that I just mentioned. What really changed for me with Bitcoin is that there's actually a solution for that. When I graduated college, I still believed all of those things, but at the end of the day, what are you going to do about it? And as far as I was aware, Bitcoin existed then, but I had never heard of it. In my mind, there was no solution. It's just one of those things where we live in a flawed world and you have to do the best you can with the situation you're presented with. So that was the moment, or when I was reading Safe's book, that really struck me. The idea that kept cycling around in my head is somebody actually figured out a solution to the most important problem in finance for the last century.
Yeah, I think Bitcoin's really given a rallying point to people who maybe come from a libertarian background, who are interested in freedom, who are interested in money, who are interested in finance. And it's provided a way for a lot of people maybe to come together under one umbrella where they otherwise wouldn't. There's so many angles and so many things that Bitcoin fixes. So you mentioned, Matt, that clients were asking you about Bitcoin, as far back as 2017 when you were advising at a bank and you dismissed it. Do you have a story or maybe an anecdote about a client who came back later, and what was that conversation like?
That was a bank program prior to the bank program I was at before I came to Vista. So that was a few firms later. So wasn't a ton of overlap with the client base over those years. I started working with different groups of clients, but no, for the most part, the investors and clients who I gave that bad advice to back then, ironically, actually, I think that they were probably better off for having took it, because without the support and education to understand what Bitcoin is, it's very unlikely to me that they would have held it when it crashed from $20,000 down to 3,000 or whatever it did that bear market of 2018. Because in order to benefit from Bitcoin, you have to do more than own it. You have to hold it. Other than a few things like, oh, we talked about Bitcoin way back when. Not a whole lot of follow up from the 2017 days.
Yeah, it's funny. I think back to 2017. I was in commercial lending at a bank, and I had one of my clients who was in his early 80s, and he came to me asking him about Bitcoin. At the time, I was, again, kind of just saw it as a meme and hadn't done any due diligence, really. I didn't even do the cursory, uh, investigation into what Bitcoin really was that came in the years following. And it was funny. It was probably in the early fall of 2017 when he asked me about buying Bitcoin, and I was just like, my instant reaction was, "Oh my goodness, this is a bubble." And it wasn't soon after that conversation that I sold my entire stack. I probably would have let it go anyway, but it's kind of funny, these stories that we think back on before we really dug into Bitcoin. And as you mentioned, thinking of Bitcoin as Beanie Babies, it's just funny to look back on our mental framework for it in the past. You're managing a lot of money at Vista and with Orange Horizon. I would say in your broader Vista portfolio. Are most of your advisors talking about Bitcoin? And what percentage of your clients would you say have a meaningful Bitcoin allocation?
Yeah, all of our advisors talk about Bitcoin. One of the things that makes our firm unique is that I've said before, Bitcoin's a first class citizen as far as an asset, meaning it is just as appropriate to look at Bitcoin as an asset for a client as it is stocks, bonds. We don't think it's a fringe alternative asset that may be appropriate for some speculative investors. We think it is the foundational framework of a sound financial future. And so all of our advisors incorporate Bitcoin into their typical process. As far as, how many of our clients own a meaningful exposure, meaningful is in the eye of the beholder, but a majority of them at this point, I would say, are off zero. We've recreated a series of, traditional asset allocation models to include 1 to 5% Bitcoin allocation, where essentially it's replicating what the client's old portfolio is doing, but just getting them off zero. So for the clients who don't really care about Bitcoin, don't know much about it, their mindset is, I trust you guys. I'll do whatever you think is best. That's been a way for us to at least get them off zero, get them started. But then we have other clients who own actual Bitcoin who have the majority of their net worth in Bitcoin. So it covers the range there.
Yeah, that's really incredible. I mean, seeing most of your clients off zero is, a testament to what you guys are doing at your firm, and I think that's really huge. I just think of the multiplicative effect. What if there's 10 firms doing what you're doing? What if there's 100 firms? And then, what about when most financial advisors finally get Bitcoin or start adding Bitcoin to portfolios? Where we can go as far as adoption and price. Not official investment advice here, Matt, but what do you say to the person who maybe talks to you about Bitcoin and thinks they missed the boat on price action?
The first thing I point out to them is that Bitcoin's not a stock, it's a new asset class. So the idea that someone missed out on it because one Bitcoin is worth 90,000 today, or the asset class is 1.8 trillion or whatever it is. I just point out that, because, at around $2 trillion, that puts Bitcoin's valuation up there among the most valuable companies in the world. I think that's the main lens that people view it through when they think, oh, I missed the boat on it. When the more appropriate thing to compare Bitcoin to are assets worth hundreds of trillions of dollars, like fixed income, equities, real estate, and even gold. I think is now 35 trillion. So I point out to them that I've talked to a lot of Bitcoiners over the years, some who have owned Bitcoin a long time, and almost all of them at one point thought they missed the boat. So for anyone who's saying, sure, I wish I would have bought Bitcoin back in 2020, but I didn't. There will be people in 2030 who say, I really wish I would have bought Bitcoin in 2025, 2026. I think we'll be hearing that for a long, long time.
And we always wish we added more to our stack, right? Find ways to add more. So we've got a lot of listeners to our podcast who are Bitcoiners who are sitting on 6-figure US dollars worth of Bitcoin holdings, 7 figures, even 8 figures. But they probably haven't thought about estate planning. They haven't thought about insurance, tax strategy. What's your message to them? Not official investment advice. There's individual situations, but broadly, how do you talk to people who should be thinking about estate planning and tax planning?
The first question related to that I ask if they're a Bitcoiner is, if something were to happen to you, if you were to pass away unexpectedly, would your heirs know what to do, or would you make an unintentional donation to the rest of the Bitcoin network? And if they don't have at least somewhat of an answer to that, then that's a pretty good indication that they need to do some planning. I will say, however, that for the majority of Bitcoiners I come across who are in that situation where they own 7 or 8 figures of Bitcoin, the estate planning piece is almost always one of the top things on their mind. So fortunately, I don't think there are a lot of Bitcoiners out there who are just, blind to the need for that. For the most part, they are aware of it. It's just a matter of helping them to get in touch with the relevant professionals and working with them directly to put a plan in place that makes sense for their situation.
How difficult was it to find partnerships? You mentioned that you partner with Swan. Was that something that you just intuitively knew because you were following Bitcoin, or how difficult has it been, and how difficult is it for firms who may be in the same boat to kind of find those partners today?
It's easier today than it was when we started, but it is still a challenge. For example, the way that we found Swan was for months, every single day, I Googled and searched for Bitcoin RIA custodians. And finally, they released their Swan Advisor platform. So that came up in the Google results. I went to their website, filled out a contact form. Ryan Flynn from Swan reached out to me, and the rest is history. But that's a good example of the fact that a lot of what we had to implement and put in place didn't really exist yet when we started. We or somebody else had to build it for the first time. So, because we've done it now, it's obviously possible for other firms to do it. But if we had to start from scratch today, it would still take a while to reinvent that wheel. So what I tell other orange pilled financial advisors who are in the same situation we were in back in 2020, 2021 is, broadly speaking, they have three options. Option one is to try to orange pill their existing firm, infiltrate it from within, and try to get them to do what we did, implement all those solutions. Option two is to leave the current firm and do what we did, recreate your own version of a Bitcoin friendly RIA. Or now that we've done it, option three would be to join a firm like ours. And we discovered once we put all the pieces in place and worked for years to solve our own problem, we realized, in my opinion, we have created one of, if not the most attractive wealth management firms in the United States for like-minded financial advisors who don't want to reinvent the wheel, who just want to plug their business into an RIA like ours. And so November of 2025, we opened our first satellite office location where an advisor named Jeff Arand went independent by registering under Orange Horizon Wealth. So we're now focused on helping him get up and running and growing his business with Bitcoin. And we expect there will be a lot of other branches across the country here in the years to come.
That's really cool. Now, Matt, if you could go back to 2017 and give yourself a piece of advice when clients were first asking you about Bitcoin, what would it be?
It would. I'm trying to think of the educational resources that were available back then. If I knew then what I know now, my advice would be to learn about Bitcoin. And once you understand it appropriately, start acquiring some of it. But that is one thing that is significantly different today versus back then. There are just a plethora of very good Bitcoin education resources, just podcasts, books, and those some of those existed back in 2017, but it did not look anywhere close to what it looks like today. So the advice, learn about Bitcoin, may not as have been as actionable in 2017, but I think that that's the advice I give to someone today. If they don't know anything about it, the first thing you have to do is learn about it. And I think that would still be the advice if you put me in a time machine and transported me back to 2017.
Sound advice for sure, Matt. Often the best way to learn about Bitcoin is to get off zero, right? Because once you see what it starts doing to your portfolio, you have to say, okay, what is this asset?
It's funny you say that because just one thing I've seen over and over again, once we were able to just add Bitcoin to model portfolios, just over and over again, I would see a client who I've talked to about Bitcoin for years without them doing anything about it. And then once we were able to do it for them and, add a small, single digit percentage allocation in their portfolio, then suddenly a month later, they were reaching out and saying, okay, I just spent the weekend watching Michael Saylor interviews and I want to buy more. And there's just something about owning it makes you pay attention to it in a way that me talking at you for years just never will. There's just a quirk of the human mind. Once you own a little bit of something, you start caring about it.
So true, so true. I can talk to my friends in the gym all I want about Bitcoin, but until they buy their first share of strategy or buy the ETF, and then they're like, "Hey, how do I self-custody this?" The door is wide open for those conversations. My final question to you, Matt, is say there's a financial advisor out there watching this, or there's an investor who wants to know more. How can they reach you? How can they learn more about Orange Horizon Wealth and point everyone to your socials?
Mentioned we launched in May of 2024, and up to this point, we have done practically no marketing. So 2026 is the year where we're going to have a lot more of an online presence. But for now, orangehorizonwealth.com is a website. My handle on Twitter is at Matt Golliher. It's MattGolliher. Those are two of the easy places to start.
Thank you so much, Matt. And one thing I have all my guests say before they leave is stay orange.
Absolutely. Stay orange.